Are they going to intervene? What are the chances here, I guess, and what is the outlook here?
Well, there are always two parameters that matter. Firstly, the level. From a level perspective, we are surely very close to that. Because last year, when the yen was weaker than 150, then we saw the intervention. So now, certainly in terms of level. But in terms of pace, we are sort of better here because the yen drop has slowed over the last month or so. Because market also was very alert about BOJ coming in. So nobody want to sort of sort the yen at these levels.
Yeah.
So that's why, from a level perspective, yes. But from a pace perspective, it's better for the Bank of Japan. But again, bottom line, as long as the dollar stays strong, US rates stay high relative to the Japanese yield, the Bank of Japan will have to be alert.
Is it likely that we're going to see more in terms of capping yields in the bond market versus looking more at the currency? Because those two things are kind of counterintuitive, right?
I know. I think right now the Bank of Japan basically leave the FX job to the Ministry of Finance, so waiting for them to intervene. But in terms of monetary policy, they have to gradually normalize because we see like the data in Japan, the economy is still doing okay. Inflation is very resilient. The core inflation about 4%. So basically, the Bank of Japan has to move away, as we have seen in July.
Let's get to the RBA. Just a few minutes away. Obviously, we've seen the Aussie. I mean, it's been way down from everything, right? Rate differentials, China slowdown. How much further can you go?
I mean, like everything is going against the Aussie. I mean, the good thing is that like it used to be very correlated to the gold, and these days slightly less, which is better. Otherwise, the Aussie will be hammered down even lower. But as you said, it's really a dollar story. It's really a rate differential story. So as long as the RBA stays here, even if the Fed stays here, I mean, the rate differential still supports the dollar. And if things get worse, if you get like a global like recession, I don't know, stagflation, global slowdown, that favors the dollar against commodity currencies as well. So the Aussie, I mean, like it's really bad going forward.
So let's have a look at the whole sort of currency complex. You know, is there anybody who's showing resilience? I mean, even the Swiss francs have been a victim to the strength of the dollar. But, you know, is it a top pick? What do people say?
The thing for the Swiss franc is because they stopped hiking. So now, apart from being a safe haven, now market also look at rate differential. So that's why the Swiss franc has been sold right after the SME decision. So again, it's very hard to go against the dollar until the Fed blinks. But we don't really see that. And now, the market is all looking at the November FOMC. Are they going to hike? Are they not going to hike? So at least from now till November, it's very hard to go against the dollar.
All right. Stephen Chiu, thank you.